Welcome back, student, to Unnati Commerce classes, where I am going to simplify commerce for you for class 11th. So in previous video, we discussed all the important and related steps of journal entries. I hope the journal entries have been clear for you. And if you have any doubt related to that particular video, you can ask me in the comment section. So now, the next step in our accounting strategy, or you can say in accounting books, is ledger. So what is a ledger? Ledger is a book of final entry. Why do we call it a book of final entry? Because it is the book of entry where we are going to classify all our journal entry at one place and going to calculate the balance which we are having in a particular accounting year. After that, all the balanced amount or whatever amount we are getting from all those transactions going to transfer to the trial balance. So first, ledger is a book of final entry. All journal transactions are classified and posted account wise. Yes, they are classified to a particular head. For example, if cash sales has been done, so all the cash sales will come into cash account as well as the cash purchases. So it helps us to determine the balances for the preparing trial balance. That is why it is called a final entry book. Now again the question, why do we need to prepare ledger accounts? So we need to prepare ledger accounts so that we can have the actual balance in a particular accounting year. How much we have earned, how much we have spent. That is calculated because of the ledger accounts. Now, it helps us to prepare the financial statement for our firm. At the end of the accounting year, all these balances helps us how to calculate our financial statements or the financial position. Now, what are the steps to post entries from journal to ledger? Again, journal is the primary book of account and ledger is the final book of accounts. So we are going to transfer our transactions from journal entry to ledger accounts. So first step is to identify the accounts involved in the journal entry. In last class, we had discussed while preparing the journal entry which two accounts are involved. Yes, so we have to identify those accounts and post the debit amount to the debit side of the respective account and credit amount on the credit side of the respective account, which we have already classified in the journal entry. I hope that is clear. Now, when we are posting our entries to the ledger, on the debit side, we are going to write to, and on the credit side, we are going to write by. Don't worry, don't get confused. I am going to share the format with you of the ledger, and through format you can get a clear picture of the ledger account. So here is the format of a ledger account. As you can see, this particular table is divided into 6 parts: debit side and credit side. Don't worry, I am going to share the format of a ledger account with you. So here is the format for the ledger account. As you can see, this particular table is divided into 8 parts. One in the center, and here both sides it is a mirror image. Date, particulars, general folio, amount, again date, particulars, journal folio, amount. So date, whenever we are going to transfer a transaction from journal to ledger, you are going to write the particular date here, at which date that transaction had happened. Then particulars. Particulars is about the account involved, how that particular transaction happened. Journal folio is the numbering of that transaction in the journal book. Amount all you know the amount of the transaction. This will be the debit side and here will be the credit side. Same things will be transferred to the credit side, whichever account is involved and whichever amount is involved. I hope the format is clear to you. You can take a screenshot or you can ask me if you have any doubt in the comment section. For your convenience, I have put an example of cash account. As you can see on the screen, the date 1st April, to capital account, journal folio 1, amount 10,000. This is basically the capital introduced in the business. So this is how you are going to put that particular journal entry in the ledger account. Now I'm going to discuss a few journal entries and how those journal entries going to be posted in the ledger account. Let's have a look. Here, the first example is cash account, debit 10,000, to capital account 10,000. Second example is for the purchases, purchase account debit 5,000 to cash account debit 5,000. In both the transaction, the cash account is involved. In first transaction, the cash account is debited, and in the second transaction, the cash account has been credited. So now we are going to prepare a ledger posting for cash account. This is the ledger posting of cash account. How? From journal to ledger. So first, the date 1st April, to capital account. The transaction was cash account debit to capital account. So cash account is going to be debited by the name of capital account. So that means cash on the cash account's debit side, we are going to put 10,000 of amount in the name of capital account. Yes, so to capital account 10,000. Then the second transaction was for the purchases where cash account was credited. Yes, the cash account was credited. So on the credit side, right side of your table, we are going to put date 5th April, particulars by purchases account, because in the transaction the cash account was credited by purchases account. So purchases account will be credited in the cash account, journal name to amount 5,000. So this is a very fair and clear view of your cash account. The posting of journal entries to the cash account. I hope this account is clear to you. Now, when we put all the transaction, we have classified the transaction, we have put all the transaction in particular accounts like cash account, purchases account, sales account, or maybe the drawings accounts or the particular creditors account. The next step to balance the ledger. Yes, we are going to balance our ledger accounts then. How to balance the ledger accounts? Total both the sides of your ledger account, as in credit and debit. You have to take a total of both the amounts. Then you have to find the difference between the debit side and the credit side. Yes, whatever amount there is, the difference between both the side will be carried down to the next period. And we are going to write that as this amount carried forward, this amount brought down. I am going to share few examples with you with a particular view of the ledger posting account. So the cash account balance was 10,000 for the debit side and 5,000 for the credit side. So our amount, we have a debit balance. Always remember, cash accounts having debit balance is the positive balance. So here we have the debit side is more than the credit side. So we have a debit balance, that means a positive balance. So it will be written as balance carried down 5,000, and in the next year's account we are going to write balance brought down by 5,000 cash account balance. So at the final stage of our video, I am going to summarize all the steps for you. Ledger is the book of final entry, as we had discussed in the beginning of the video. Posting transfers into ledger from journal is the second step. We have to classify all the transactions and we have to write all the transactions from the journal to ledger. It helps us to compute the balance for trial balance for our financial statements. And it is a very essential step in the accounting cycle. Thank you so much for watching again. If you found this helpful, subscribe for more commerce classes. Next video will be on bank reconciliation statements. I hope I am able to clarify a few questions of yours, and if you still have doubts in this particular topic, comment below and let me know if I can be more helpful for you. Thank you so much.